Wonderful. Then let's get started. A warm welcome to everybody. Good morning, good afternoon, or good evening, wherever you're dialing in from. By way of introduction, my name is Deborah Keller, and I lead on the Impact for Breakfast initiative supported by Artha Impact, the impact investing arm of the Rianta Capital Family Office. This specialized group has been gathering and growing since 2008, starting in London with a small group of investors coming together on a regular basis to exchange knowledge, case studies, anything that would help them do their impact investments better. Today, we are 3,300 members strong, and we have 32 chapters, locations around the globe where members come together locally, regularly for a breakfast, and like this one, where we would meet virtually in a virtual room. Impact for Breakfast is an informal network of family offices, foundations, funds, venture philanthropy, and intermediary organizations with a common focus on social enterprise, entrepreneurship, and impact investing. Those who are here for the very first time, I'll share the link of the Impact for Breakfast website where you can read more about us, and you're welcome to register as a member so we can keep you updated on our events and what we do, the various events we have in the different locations and chapters. Today, I have the pleasure to host the fourth session of this series. We will showcase how foundations are integrating impact investing into their approach to advance their mission. And for that, I have the pleasure to introduce you to amazing speakers from this sector that will share with you their practices. We have with us today Adam Cianciara, Head of Program Partnership from Save the Children, Johannes Schreuder, Business Engagement Lead at Peace Nexus, and Alejandro Alvarez von Gusted, Vice President Europe from Rockefeller Philanthropy Advisors. And last but not least, our wonderful moderators, we have Frederick Bernay, Head of Products and Risk at iGravity, and Tim Raddy, Founder and Managing Partner at Alpha Mundi Group. Before we get started, I have a few housekeeping rules I'd like to share with you. So this session is going to be recorded. We will share the link to the recording with you in a follow-up note. You are welcome to share this recording with your network. We will also include the presentations and the contact details of the speakers, so you can reach out to them in afterwards if you still have a few questions. We will, during the we will go through all the presentations. After the presentation, we'll have time for a Q&A where you can ask your questions. You can also drop your questions in the chat field, and Tim and Frederick are going to do their best to cover the questions. You can also unmute yourself or raise your hand to ask your questions directly. So now, with no further ado, over to you, Tim.
Thank you very much, Debbie. It's good to see everyone, a lot of familiar faces. Good morning. Before we jump into the presentations with these three great speakers that we have, maybe some background for those who don't know me. I'm Tim Raddy, the founder of Alpha Mundi Group based in Geneva, and we've been doing impact investing for 15 years. We've also got a nonprofit foundation based in the US for the last 5 years, leveraging our impact investing work through donations and technical assistance to catalyze faster change and greater impact across our portfolio in Latin America and Africa. We're involved in a number of market building initiatives. Here in Switzerland, we're a co-founder of the Gender Lens Initiative for Switzerland. Maybe just one word about the topic of this series, Mission Multiplier. Essentially, we have fallen very far behind the funding required for the Sustainable Development Goals. And we need to make every dollar count. We need to make every expertise count. And this is an era in which none of us alone can achieve the sort of impact that we need to avoid the worst in terms of climate change, plastic pollution, social inequality, etc. And so it's really an era for collaboration between actors of the same sector, but also across sectors. And in Switzerland, of course, we are known for this as an ecosystem. We've got a conference dedicated to that on an annual basis, Building Bridges. And the idea here is to help philanthropists that we define broadly as individual philanthropists, but also endowed foundations and NGOs, to find out different ways that they can leverage their resources and knowledge to work and use impact investing to further their mission, right? The mission multiplier. In Switzerland, we know that there are thousands of foundations that are registered. We know that the majority of these foundations have small endowments. More than 80% of the foundations have less than 5 million Swiss francs in endowments. And we also know that unlike other philanthropic markets, there is no obligation for foundations to publicly disclose their financial reports. And that may hinder, to some extent, collaboration and innovation as well. Now, Switzerland has a long tradition of philanthropy. It is a leader in microfinance. It is one of the leaders in impact investing. So we have all the tools at our disposal, all the experts, to be able to really be a front runner when it comes to this relationship between philanthropy and impact investing. And that's the purpose of this series, is to inspire each of you with real life models from NGOs and foundations and philanthropists that are either in Switzerland or based internationally, but that can be relevant for your own program activities and mission. So thank you for being here today. I'm going to invite Fred perhaps to say a few words about iGravity, and then we'll jump into the presentations. Fred, over to you. You're on mute.
Good morning, everyone. Sorry. It's always a pleasure to be here and to be associated with Alpha Mundi in this noble idea to basically join forces here in Switzerland. For those who don't know iGravity, we're 100% dedicated to impact investing. We do two main activities. We do a lot of consulting and we advise on investments. Our consulting is mainly to foundation, precisely to help mobilize philanthropic capital into impact investing. So we're very keen in innovative finance, and we also help the Swiss government in that respect. And our investments are partly a foundation who trust us to have mandates to deploy this capital in impact investing form. So we recently deployed a partnership with the Danish Refugee Council with a refugee investment facility, which is going to mobilize capital for helping small enterprise, helping migrants, especially in Africa, but also in Jordanian. And we also do some liquid investments, which is a bit more challenging, convincing private investors and banks to move their capitals away from what I call the ESG into the impact space. And that's a very challenging space. So I'm very keen to also look at the various speakers as we do since the fourth series now, and to try to map this ecosystem together into a more visible solution base for all the foundation that are here in Switzerland. So with that, thank you, and looking forward to hear the speakers.
Thank you very much, Fred. And again, an invitation to the audience for those who joined us recently to add your comments or your questions in the chat during the speaker presentations, and we will then have a Q&A at the end of the three presentations to address as many of your comments or questions as possible. So without further ado, I will hand over to Adam Cianciara from Save the Children. Adam, thanks for joining us today, and please go ahead.
Thank you, team. I was told that I have only 10 minutes, so I'll go straight to my presentation. I'm Adam, Save the Children Switzerland, and I'm a fundraiser. I've been working in the fundraising department for the last 5 years, and it was always a classic fundraising, so traditional philanthropy donation-based. But in the last year, I was more closely involved in the new journey from Save the Children, which is impact investment. And can you see my presentation, by the way? Is it up?
Yes.
Okay, perfect. So yeah, so we started this new journey as a Save the Children in impact investing, and I would like to tell you why we think it's a good idea, although it sounds a bit scary at times. But very shortly, who we are. So Save the Children is one of the leading independent child rights organizations in the world. So you've got on UNICEF under UN mandates on the one hand, and we are the other one. We are pretty old, 100 years old. We were funded in 1919 by the English teacher England and Jeb. We do both things. We do humanitarian aid and we do development long-term projects. And what's important for impact investing, we are pretty global organization. We are active in more than 120 countries. And the way how we work in those countries also translate a little bit into the decision why we want to do impact investing. So in all of those countries where we work, we actually have boots on the ground. So we have so-called country offices, which are the NGOs registered under local law. And those NGOs, those organizations, those country offices, at times has been in those countries for years. So we've been in Kenya since 1950s, in Cambodia since 1970s. So in the meantime, those organizations become like a pattern of, like a part of the social pattern and the landscape. We've been working with almost all stakeholders, from the federal government to the families, to communities, to social civil organization, and so on. So we've been across the world, like 120 countries, and within this country, pretty well present. And this, I will get back to this point later, how we want to really unlock this potential. So what we do, like in traditional NGO type of work, we of course focus on children, hence the name, and we focus on three main pillars: so survival, education, and protection. I don't want to go into details, but I would just want to quote one figure that is still astonishing, and this is like give us motivation to work. Like, we are 2023, and still 5.2 million children dies every year from preventable diseases. We're talking about diarrhea. This is what kills children. So this is kind of starting point where we are, and why we got to the impact investing as a global NGO. So we know it all. There is a huge funding gap in terms of SDGs. There is a huge need, I just told you. And we realize, as a kind of classic NGO that works on like traditional philanthropy, grant, donation type of work, we realize that there is a limit, a ceiling of what we can do through this way of funding social impact. And it's not only about how much money is involved, is available in the market, but what kind of money is available. So just to give you an idea, and I don't think that I will expose Save the Children here too much. Many of my colleagues from other NGOs will probably confirm the same. The average duration of Save the Children grant is 18 months, 1/8. So it's less than 2 years. So this is what we got. It's not what we want. This is what we got from like a traditional base type of philanthropy and grants donations. And 18 months is definitely by any means a patient capital. It's difficult to build any impact within 18 months, let alone measure this impact in 18 months. It costs us a lot to bundle it together. So what we try to find it, how we can all compile it. So those grants are, stack one on the other. So there is some continuity of our work. But if you think about it, it's not sustainable. And of course, we work with the traditional donors and try to improve the situation. But the fact is that the average donation grant is 18 months. So there was this opportunity like, hey, look at the impact investing. There is a growing and established market that provides a patient capital, there are investors that gives you money for 10 years tenure, and they are patiently wait for the return. So that was kind of an opportunity, and we jumped on this opportunity and decided to launch a family of the of impact funds. And we wanted to do it within house, so within the Save the Children. And we opened it Save the Children Global Ventures. So this is a hub within the whole family of Save the Children that is mandated to run those impact funds on behalf of the Save the Children. It's actually a registered foundation in Geneva in Switzerland, and it works on behalf of the whole movement. We staff this global ventures with an expert in finance and expert in investment, so it's not going to be me who will run the show. But I will tell you also why we think we can be good at that. Maybe I'll should explain picture on the left. So those are soaps. And within the soap, there is a plastic toy. We pilot this in contexts like refugee camps, or in after emergency, in the emergency zone, when there is a plenty of problem with hygiene, water, waterborne diseases, dirty hand diseases. And a simple thing, a toy within the soap makes children wash their hands more eagerly. So that's kind of just explanation of the picture. But now, why we think as a traditional global NGO, we think that we could be good at impact investing. Of course, there's a mission alignment. So what we want to do, we want to invest in a startups companies that push in the same direction. So all companies, all startups that in their work benefit children, whether it's a health, education, whether it's a data, it can be anything. Just at the end, eventually they benefit and impact children. And of course, we're talking about the startups and small companies. And the biggest promise of Save the Children is this global footprint. So the other day, I talked to Blue Orchard. You probably all know Blue Orchard, and they told me that they have 4 regional offices that work on deal flow and identification of investees. And I thought, like, well, we have 120 country offices. So this gives us kind of an idea that we can unlock this huge potential across the world to source and identify deals, and also to build those companies. Because it's not, one thing is that we can, identify companies to invest across the world that sometimes fly under the radar of other impact investors, but also we can help to build this organization because we are in those countries. So imagine there is a startup company that works in a field of health in Kenya. The by default client or partner for this organization is Ministry of Health of Kenya. And we work with Ministry of Health of Kenya. So we kind of want to unlock this global footprint and our weight within the countries to source the deal, to build this company, and and kind of move the needle in terms of catching up the gap with SDGs. We also feel quite strong about impact measurement. I know that this is one of the topic among investors, like impact washing. We need to adjust a little bit, but we've been measuring our impact for years right now. We need to change it a little bit to measure the impact of the companies that we invest in, but the methodology and the system is there in place. So this is why we thought that it's a great idea to do this. We launched a family of impact funds. We started in Australia. So Save the Children Australia, our colleagues launched a private equity fund in 2020. It was a small one. It is 7.5 million Australian dollars, which is something like 5 million US dollars. It was a really tiny one, private equity fund, but it went well. So in terms of investors' interest, there was a huge interest from the investors in this area. And also the deal flow went well. They are now halfway through. They deployed 50% of the capital. And it seems quite promising. So that gave us like a hope that, okay, maybe we can do it and scale it up. So we are going to scale it up, or we're scaling up. This year, we aim to open another impact fund. It will be private equity fund, European impact fund. It will be bigger. It will be 20 to 25 million. And yeah, as I said, we hope to launch it in October 2023, but please don't quote me on that. You will hear once we do it, you will hear it, but yeah, don't hang on the date. But definitely we're going to do it this year. And we are going to open the follow-up on Australia Impact Fund because there was such an interest from the investor in Australia or in the region, Asia Pacific region, that we decided to make a follow-up and make the fund bigger. Also, what we have a Multiplier fund, which is like an open-ended evergreen fund based on donations. So what we do, we try to raise donations and turn them into the more like innovative finance, and whatever returns we create goes back to the fund rather than to the donor/investor. So this is where we are right now. This is the beginning of the road. There will be, of course, many challenges already and probably plenty of challenges ahead. One interesting is it's a mindset, right? It's a mindset of a traditional huge legacy organization as Save the Children to turn into investment and convince the organization and people within the organization to do that. I still have plenty of colleagues from the senior management to program teams to even fundraisers that either have no idea what it is like private equity fund or have like plenty of questions in terms of what we are doing. Are we turning into a hedge fund? Are we going to be a bank now? So there is definitely this kind of a mindset that people are not fully okay or not fully confident with this idea. What helps us as a Save the Children is our decentralized structure. So Save the Children globally is an association made of independent members like Save the Children Australia, Save the Children Switzerland, and so on. So there are, of course, things that are mandatory to all of members, like our strategy and what we do on the ground, but things like impact investment is optional. So organizations like Save the Children offices can opt out. Of course, we want them have on board, but it somehow ease the tension, like not everyone has to do this, right? So this kind of help us to solve this problem, like people being not fully comfortable about impact investment because they are from different type of mindset and world. So our decentralized structure definitely help. And also what help is also part of being decentralized is that someone started, and it was our colleagues from Australia that experimented with the impact fund in their own market. And they could do it because in Australia, they present themselves more as like more as a technology, innovation-driven NGO rather than legacy NGO, and it helped them to do this, right? So they started it, and it looked nice, so we decided, okay, let's scale it up. I will stop here, so you have some time for question. I'll stop the presentation also, so I can see you better. So thank you so much, and please let me know if you want to know more.
Thank you so much, Adam. Great presentation and very efficient as well. So again, if the audience has questions or comments, you can always share them in the chat. We're going to move straight to the next presentation. Johannes Schreuder from Peace Nexus Foundation in Switzerland. Johannes, please go ahead.
Well, good morning, everyone, and thank you, Tim, for inviting me to share some of our views and approaches on impact investing and advancing our agenda with our investment portfolio. And Adam, thank you to share a little bit of the Save the Children work. We're interested to learn more and follow up after today's call. Let me try to share my screen. Is it visible?
Yes.
Great. So what I would hope to do in the next 10 minutes is tell you a little bit about ourselves, our foundation, the key elements of our investment strategy, how we tried to create impact through listed equities as well. I think that's often overlooked as an avenue to create positive impact, and what we're doing on impact investing, and also what our ambitions are with impact investing. So I think we want to do more. So very excited to be in today's call. Peace Nexus is a Swiss private foundation established in 2009, and we work with a wide range of organizations to strengthen their impact when they work in fragile and conflict-affected settings. So we work with international organizations to strengthen their conflict sensitivity. We work with local grassroots level civil society organizations to become more effective. And we also work with multinational companies. How can they improve their business practices in fragile states to have a greater positive impact and avoid doing harm, which is unfortunately still the case when they have operations in fragile and conflict-affected settings. We're a team of 20, based here in Geneva, but also in Southeast Asia, Central Asia, West Africa, and the Western Balkans. So that are our areas of focus. And we were privileged to receive a single grant from a Swiss philanthropist, Hans-Jörg Wies, at the onset of the foundation, and we can invest that grant in line with our mission. And maybe it's good to clarify as well that, and I think that is common for foundations, that the vast majority of our investments is managed via discretionary mandates with Swiss asset managers. So over 80% of our investments is managed externally. And I think that's also interesting for you, if you're approaching foundation, okay, to what extent do they have the liberty to make impact investments or investments themselves, or to what extent have they outsourced that responsibility to asset managers? So what have we captured in our investment strategy? It's publicly available, but some of the highlights are that we would like to make a return on our investments. So all our work we're doing is to a large extent funded by the returns on our investment in good years. So we need to make financial returns. So that's one criteria. The second criteria is we do not want to invest in companies that conflict with our vision. So we have certain exclusion criteria. We don't provide funding to weapons companies as a peace building foundation, obvious exclusion criteria, or other companies that have severe controversies. We don't want to be associated with these companies. But on the flip side, we also want to invest in companies that contribute to our vision. So that's partly best-in-class companies. So companies with a high ESG rating, companies that have progressive sustainability policies and practices that we think contribute to a more sustainable future. And finally, we want to engage the companies that we are invested in to be more considerate about their peace building impact. What is their footprint in fragile states, and how can they modify their operations to create a more positive impact? And in 2018, we didn't have bandwidth to increase our impact investment allocation, but we did want to create more oversight and impact with our listed equity allocation. So we started looking for, is there a fund out there that engages companies specifically on the peace theme? And we didn't find it. So we thought, okay, let's create it ourselves together with a Swiss asset manager called PPT, the Puri Pictet Turretini. We developed a peace themed engagement fund. And we provided it with seed capital and designed the whole engagement approach. And what we try to do is, in a structured way, offer recommendation to the companies in the portfolio. For example, there are technology companies, like, who are your clients in fragile states? Are you sure that they use your product for the intended use and it's not being misused or could contribute to human rights abuses in these markets? If you work with distributors, how do you know that they're not politically affiliated? What kind of due diligence process do you have in place in conflict-affected states? I think companies should take more responsibility when they operate in these markets, and we want to encourage them to take that responsibility. But we don't only stop at providing these recommendations. We also facilitate workshops for these companies on conflict sensitivity. What is your interaction with conflict? What can you do better? How can you assess how your operations influence conflict dynamics? And in select instances, we become a partner of a company and really accompany a change process. So there's a pharmaceutical company that says, okay, we want to be better in distributing medicine in these markets. We want to do so in a human rights informed and conflict sensitive way. Can you help us in that journey? So then we work with these companies in that process. And I think the theme of today is impact investing, and that's something we are excited about as well. I think what we now have is an allocation for impact investing. So a dedicated part of our portfolio is allocated to have impact or social and environmental impact as well. But I think what we have now is that it's mainly invested into well-established, more traditional funds. Adam already mentioned Blue Orchard as an example. We have an investment in bamboo, but we started a discussion with the team and the board, like, can we move beyond that? And can we take on more ownership? And I think if we want to do that, we need to move beyond our banks, because it is difficult for a Save the Children to get into the portfolio of an asset manager, an established asset manager, and have their product being offered to foundations like ourselves. So if you want to invest in more innovative products, you have to take greater ownership yourself and make these investments and not rely on your asset managers to make these investments. We also want to see, okay, are there products with this peace building impact which are aligned with our strategy? So we are very concerned about global warming and the impact that has on conflict worldwide. So are there funds that, for example, provide access to energy in fragile and conflict affected markets? Can we help them to become more conflict sensitive? So it's a combination of making an investment in the fund and also helping them to further strengthen their capacities. But we also think that we can make multiple small-scale investment to kickstart promising new initiatives. So that's a bit the direction of travel. It's currently a live discussion. Can we do more ourselves and not only rely on the selection of products that are offered by us by our asset managers? So I'm excited to be in today's call to learn what kind of products are on the market and any reflections from the group. Thank you.
Thank you very much, Johannes. Excellent coverage, and I'm sure you'll also generate a lot of questions, just like Adam's presentation did. Again, please write your questions in the chat, and we'll address them after the third presentation. Alex, you are the European Senior Representative for Rockefeller Philanthropy Advisors. The floor is yours.
Thank you very much, Tim, Deborah, and Frederick, all the organizers. Delighted to be here, and especially delighted because I see so many friends among this crowd. So thank you for your time, for your attention. I also do have a presentation. I don't know whether somebody can help project that. I will start by introducing myself and the organization I work with. First, you may have seen I have a complicated name. Just call me Alex. I'm half Spanish, half German. That explains the complication. Apologies for that. And I work with Rockefeller Philanthropy Advisors, and I like to start by saying who we are not, because people quickly confuse us with the Rockefeller Foundation and believe that we have this big endowment to do things with, and we're not direct funders, although we do work a lot with funders. If we go to the next slide, I'll provide some context about the organization. So we're not direct investors. We're essentially philanthropy advisors, also implemented philanthropic programs. But we do share the same legacy with the Rockefeller Foundation, but we're a different, entirely separate organization. We were originated as part of the family office of the Rockefeller family that invested their philanthropy and impact investments. And there was a moment where they realized that they could amplify the impact if they could share the wealth of knowledge that the family and the family office had externally as a way to help others to amplify their impact. No? So this is all rooted in the legacy of the Rockefeller family. The Rockefeller family is very engaged in this effort. They're the majority of our board. And I like to call it RPA, so don't get too distracted by the name, the long name. It's become a big organization over the last 20 years. It facilitated over 3 billion in gifts and investments. We do manage funds for third parties. We do program management for philanthropists or foundations who need that help. We host collaboratives. So we do actually manage over $500 million annually. And we do this pretty globally, not as globally as Save the Children. We're in 77 countries. But our mission, and that was in the first slide, is essentially what we're all about is to much more effective and contributes to a much more equitable, just, and sustainable world. So that's our mission. My own contribution to this, I'm not an investor in this sense. I see myself more as a field builder, and I try to leverage the wealth of capabilities of knowledge of this organization to help the field in Europe. No, I took up the role of vice president in Europe 6 months ago, and I'm looking to help the ecosystem in Europe advance so we become much more effective. We generate more impact collectively, right? So if we move on to the next slide, I'll skip this one quickly. So we do a lot of strategy and advice, management and implementation, hosting, and also thought leadership. I mean, these are all ways in which we try to advance the sector. By thought leadership is participating in these conversations, but also we do a lot of research and we try to disseminate best practices, which are a public good. We're a nonprofit. We try to help the entire sector move along. If you go to the next slide, now, in terms of the framing, our perspective, we have an expansive definition of philanthropy. We believe different types of resources need to be deployed to achieve this societal impact. No? Tim was posting in the chat box the amount of capital that is out there, the total assets worldwide. We know that there's this massive gap to reach the SDGs. I think it's more than that, 5 trillion per annum are needed. When you look at the slide, and I give credit to EBPA, who's done a lot of good work here, and you have probably seen versions of this, I'm not telling you anything new. You see there's a continuum of what we call a continuum of capital that goes from philanthropy to traditional investment that supports different types of organizations below, right? From NGOs to traditional businesses, and then there's a spectrum in between social enterprises or social purpose organizations that may have an emerging business model or could be fully fledged businesses. And from the right side, you see that there's more and more companies that follow ESG criteria who have very specific intentional impact objectives. This entire system, which you all know, is needed. We're not going to achieve the SDGs if we don't support the system, excluding traditional businesses that create negative externalities, right? But we need to move capital towards impact, be it responsible, sustainable investment, and then on the left side, philanthropy, venture philanthropy, impact investment are essential. Right now, we're short in many of these places, particularly in the middle part. I would say everywhere, but the left side and what EVP calls investing for impact, there's always a shortage there, and particularly in the early stage seed, support for social enterprises and the kind of this intersection of impact investment. I'm telling you this, assuming that this is no news to anybody, but to just underscore that we are working to try to help our partners to mobilize more funding in these areas, and very often the philanthropy and investment world behave like two religions. And it's been very difficult to get them to work together or to move closer. Big distrust from the investment world about philanthropy. It's giving money away. It's very small money anyways. And on the left, they're concerned about impact washing or complete disregard for impact. We believe there's a middle ground that not only exists but needs to be mobilized. If we move to the next slide, please. This will also be no news to you, but it's part of what we're trying to work on, and it's an obvious point. The impact investment is not the solution for every situation, but it can help scale up big time situations where there are markets and where there are business models, right? And it's the way where philanthropy is very small in terms of total size of assets. It has a disproportionate capability to catalyze innovation and new business models and so forth, and that then impact investment can take up. I'm not going to go through the whole this matrix, which looks a bit complex, but what it describes is, of course, the type of instruments you deploy will depend on the situation, right? Not only the goals of the investor, the axis on the left, but also the type of business models, whether there are commercial markets or not, and the type of business models that they are, right? And if there's no market, obviously you will have to use grants. But what's interesting is sometimes when there are no markets yet, or there start to be some markets, philanthropists or hybrid instruments can play a very catalytic role that then enables or that creates business or investment readiness. Now, you all know this. I always like to quote Stichting Dön with permission here. For those of you who are not familiar with them, they're kind of the venture philanthropy arm of the National Postcode Lottery in the Netherlands, one of the biggest grant makers, and they have this arm that has as a motto, not subsidize when necessary, but invest when possible. And that is I think that it's a model that doesn't apply to every organization. Not every organization wants to do that, but it certainly is one that I identify with and that I believe has lots of potential. And we're working along this model. We're working with many, many organizations trying to do this transition. If we move to the next slide, please. So what we're trying to do, humbly, is, and we've been trying to do this for a long time, is to advance the sector on a number of fronts. One, we're incubating important field building initiatives. No? And you may be familiar with the Global Impact Investment Network that was incubated by Rockefeller Philanthropy Advisors to just help move the sector. No, there's also Conference Philanthropy, the US National Advisory Board. I understand you in Switzerland, you have a similar initiative. We also host impact funds and programs like the Catalyst Fund, which was set up by Gates, JP Morgan, British government, to seed money into fintechs in the global south. We've developed a handbook to help foundations, primarily foundations and philanthropists, to migrate into the space, which some of you may find helpful. I'll show the link a little bit later. And then we do work a lot with funders to help develop strategies to move into the space, engage also the endowments, and just in general implementation. So that's our modest effort to try to move the sector along. If we move to the next page, you will find the a link. This is all public good, the guide for practitioners, which is we've translated into Chinese, Spanish, Portuguese. We're trying to get this used very much across the world as a way to move the sector along. Moving along a little bit more. The next slide, please. Some quick observations ahead of the discussion, which is what we observe, and this I say as somebody who's worked across Africa, Latin America, and who's more of a field builder than an investor directly. I see an increasing engagement of philanthropists and foundations and impact investments. There's good news. So there's an increasing recognition, and it's happening slowly, but it's happening, that different tools need to be leveraged in different situations, and that sometimes just deploying grants is limiting for the impact, and that foundations can significantly scale up the impact if they think of other instruments and leverage other assets, right? They can help scale capacity and impact in a disproportionate way. At the same time, there's more talk than walk, and this will be no surprise to many of you. It's still very little volume, no? And Tim has underscored this point, and particularly on the endowment side. The endowment side, that's the 95% in American terms, no? Because in the US, only 5% gets disbursed, but relatively few foundations are doing impact investments on the endowment side, although there's increasing movement, more in the US, in the UK, less so in continental Europe and elsewhere. There are some good precedents. You're probably familiar with Ford Foundation doing this move a few years back of allocating 1 billion of their endowment to this, and they've come back and said that was a great idea. And the concern with endowments is that you may put at risk your fiduciary responsibility, but their experience said, we've got 28% returns on this. It's been a fabulous idea, and it really aligns all our assets. So we need to align all our assets against impact. No? The other thing, the other observation is that the hype can sometimes be counterproductive. I always say impact investments are not the solution for every challenge. They're not every social problem done in the field has a business model, and very often there's been a bit of noise sometimes that some NGOs doing very good work felt pressure that they had to do impact investments, or the money's migrating to impact investments. I think more money needs to migrate to impact investments, but not all the money that's been deployed as grants should be migrating to impact investments. And also not in every situation, market-based returns are attainable. There's been a bit of a mantra that you can always make money and make good. So caution, it depends on the situations. There are important cultural and skills barriers. I see that a lot working with foundations in terms of many not being configured to manage investments. And many have a resistance saying, we're social, why should we be getting returns? Well, it may help scale impact. And interestingly as well, the foundation sector, while by definition should be the risk capital for the social sector, is very risk averse. So I always encourage our discussion partners, take more risks. We need to up our game, otherwise we're never going to get achieve the SDGs. And foundations and philanthropists have this, can punch above their weight even if the amounts are smaller, precisely by using quote unquote little money much smarter, much more effectively. Overall, I would say the trend is very positive. There's increasing experiences, increasing money flowing to this direction, increasing success stories, new instruments that are being experimented with and tested with. And I would close by saying that field building is essential. That's why conversations like this one is so important, because there's a lot of knowledge out there, a lot of knowledge to be developed. Everybody needs help, needs to learn from others. There's been too much reinventing the wheel, too much subscale. So networks like EVPA, fora like this are essential multipliers, I think, and that's why I dedicate a lot of energy to that. And I will add one which I didn't add in my bullets, and then I'll close my statement for now, which is I'd encourage all of you as well. I think where the greatest impact is, and there's increasing recognition and movement towards that, is getting money closer to the local communities, right? And this sounds very obvious, but traditionally impact investments, and even philanthropy has stayed very, from the global north has gone to global north organizations, or the impact investments has gone to big funds in the global north, and not enough, at least that's my experience, to emerging local fund managers on the ground in the global south, in sub-Saharan Africa, who are the ones who closest and best able to assess the risk and the opportunity in their communities to create impact. And that's why I encourage you to think of vehicles that get the money very close to the local communities. I think that's a big part of the solution. An important fund of funds being established to get money to emerging fund managers in the global south, and think of those as a very important way of doing this. I hope this is helpful for now. Let me pause here, and let's continue the conversation. Thank you.
Thank you so much, Alex. I really appreciated this overview of RPA and all the trends that are converging between philanthropy and impact investing. On this front in Switzerland, as an ecosystem, we are very fortunate because we have so much expertise and we're still a small community. So it's easy to access people. There's a high level of trust, and that can foster more easily financial innovation for sustainability, right? And there was a comment in the chat from Derek regarding a private-public partnership that essentially is a blended finance facility for coral reefs preservation. I don't know, Derek, if you want to quickly make a comment on that before we go into the questions.
Oh, yes, of course. Do you hear me?
Yes.
Great. So hello, everyone. So no, it was actually an example that actually started about 4 or 5 years ago to try to develop a new ecosystem. And so it's really two foundations who said, how can we actually help and preserve, let's say, corals? And they said, okay, what we should do is maybe not only do grant making, but also focus on outcome-focused solutions, so impact investing solutions. So they said, let's start, put a few millions together, and very quickly, actually, in a few months, 4 countries joined in, and then 2 UN agencies as well. And it became a very interesting platform today, which is actually driven mostly by the UN. So it started in the private sector, but now it's actually in the multilateral actors here in Geneva and in New York. And what is interesting, they have actually 2 tools. One is grant making to refocus on the risk, let's say, profile that actually traditional capital could not address. And then they went to the other extreme and are using venture capital as a way to fund new business models that could not only actually protect the corals, but also the economy linked to corals. So it's really coastal resilience. So at the end, what was very interesting, it started from, let's say, small-ish philanthropic, let's say, initiative, and ended up into, let's say, multilateral public-private state platform, including diverse types of capital going from, let's say, grant making to venture capital. So I think what was very interesting is actually to leave certain flexibility to the types of financial tools to manage risk that could be deployed to address a specific impact outcome.
Thank you so much, Derek. That's super interesting. Of course, oceans, a key resource, and the ocean economy is fast emerging as a new segment for impact investing and philanthropy, and an area of collaboration. In the US, they have an instrument that allows for tax optimization of donors called the Donor Advised Fund. And there was recently a fund created for ocean preservation and they've raised about $3 million. They've crowdsourced about $3 million worth of donations since January. And they're going to invest that money in venture capital funds related to the ocean economy, the sustainable ocean economy. And they're going to use the returns to provide grants to NGOs that work in the same field. So it creates a very positive feedback loop. And I think these are really wonderful models of innovation across sectors. We had a couple of questions on Save the Children's presentation, so maybe we can start with those. The first question in the chat was, what were the changes triggered by this longer term horizon, from an impact measurement, sustainability, or any other front? Adam.
So at this point, and not much changes because we are at the very beginning. And I think the question was also like operational on the ground, right? So the first thing, we don't know it yet because we are at the very beginning, so we don't see it. What happened, and because what we don't want to take, and I think Alex made the right point that not all money, we don't want to all take all money and to put into impact investment. So we will not change, that will be only a portion of what we do. So we will not change all of a sudden from what we do right now to impact investing. And we also definitely don't want to take any time or capacity from people on the ground. So that's like, if you have an expert that implement, I don't know, nutrition or water intervention in sub-Saharan Africa, I don't want this person to do that due diligence on a company, right? And what happened and would help us in this operational long-term thinking is a few years ago, the whole movement realized that we do have a problem in fundraising and this like link between what we do on the ground and what we present to the donor, because on the ground we have an expert, and with the donors we have fundraisers, and definitely, and sometimes they don't speak the same language. So what they did, we hired people in the country offices who have more like a business oriented mindset to kind of translate the work of our program colleagues to fundraisers like in countries like Switzerland, and kind of take time off and take the burden of the program colleagues to explain what we do. And those people are actually very handful to help us with this long-term impact investing due diligence, because there will be like a primary people on the ground to kind of help us with this company. So far it happens naturally. So for instance, I'll give you maybe one example that kind of shows you how it works at this time, like at the very beginning. We invested through the Australian Impact Fund. We invested in a company called ThinkMD. It is a health tech company, and one thing that they do a smartphone application that helps to diagnose simple diseases. It's like a Google Doctor. You just say yes, no, and at the end you have a very correct diagnose. And this tool is used in many countries by community health volunteers. So those are people who live in communities and have very limited medical training, so 1 week or 2 weeks, but with this training they are able to diagnose a simple common diseases like diarrhea or malaria. And with the smartphone, they can do it even better and more efficient. And now we work with those companies. We work with them on the ground. So our program colleagues told us, hey, like, are you working with anyone? And we asked them, and they said like, yeah, there's this ThinkMD, they're great. And so this now is happening naturally. So there's not much change on the ground. Let's see further down the road. What I said, luckily we do have this this business development people now sitting close to the program team that will help us to do this work. But yeah, I have no better answer to this question at this point of time. We're just really in the startup phase.
That's a great answer. Thanks, Adam. Before we move to other questions that we have in the chat for you, I see that Sucharita has raised her hand, and just in case it's related to what you just said, I'm going to give her the floor. Sucharita, you're on mute if you want to ask your question or make your comment.
Yes, sorry, do you hear me now?
Yes, we can hear you.
All right, thanks so much. First, it's been absolutely lovely listening to all of you. We know the Impact for Breakfast team for many years. I represent ANDI, the Aspen Network of Development Entrepreneurs. I have, as another field builder, I agree, and I speak on behalf of ANDI with much that Alex has shared. But I just have one submission to make to the presenters and those on the call as well, right? So as traditional grant makers, we're moving into the impact investing space. That's why I make the submission to you. which is, as you put your money there in impact investing, please look at funds that talk about impact first. I think one of the biggest challenges, and I've been tracking the sector now since 2008, very, very closely, much of it, of course, in the global South. So a lot of the impact washing, I believe, happens because of all of this impact first versus returns first, or finance first investing. We really started to be impact first. And that would be my one submission request for you to evaluate and consider, right? So put your money with fund managers who come with an impact first leaning. Thanks for my 2 minutes.
Thank you, Cianciara, for the comment. I must say that I'm sure we're all very much aware and concerned by the risk of greenwashing, rainbow washing that we're seeing in the industry. The regulators in many markets are trying to move to curtail that sort of greenwashing. We've seen a massive delisting of funds that claim to be sustainable with Morningstar, for example, particularly in the US market. We've seen the European Union issue the sustainable finance disclosure requirements that creates Article 8 and Article 9 for what you would qualify as impact first funds. So it is moving in the right direction, but I think that's a very valid comment to make sure we don't invest in something we think is a solution and in fact is not. Before we move to more questions, Alex has a comment or question.
Yeah, thank you. I wanted to thank Cianciara for her comment, because I wholeheartedly agree with that. I mean, as I said before in my presentation, we need the whole continuum of capital, right? We need all types of capital will play a role, otherwise we won't achieve SDGs. Having said that, I think where the biggest bottleneck is an impact first, because we do see a lot of impact investment that seeks already, very mature, big return providing, I'm making a caricature, right? Deals. And there's not enough in the impact, highly risky impact first space, or high potential impact space. And that is actually helping to seed and to create solutions for the most complicated problems. And I think that's where philanthropy can play a disproportionate role. That's what I was referring to, And across the world, I see that is a key bottleneck. We need the whole continuum of capital, but boy, do we need someone, and foundations, philanthropists by definition should be able to do that, be the risk takers in those early stages to come up with business models and take enterprises so that they can become the pipeline for other investors or impact investors who are not impact first and who can then take those to scale. So just to wholeheartedly agree with Cianciara and applaud her comment.
Thanks, Alex. And maybe in that respect, for us, it's sometimes difficult to create a collaboration across sectors. We're not used to speaking to the other sector, foundations to investors, investors to companies. And in a recent tonic retreat in Portugal, they encouraged us on day one to come with an empty cup. So we all have a cup that's full of experience, full of knowledge, full of expectations. And I think it's great to make the effort when you sit down for partnerships and innovation to remind yourself to empty your cup at the beginning of the conversation so you can refill again. Great. Moving on to the next question for Save the Children still. Who is funding the push for impact investing, Adam?
So first of all, can I shoot off one myth? Often we got this hit, like we are truly global big organization and people think that we have plenty of money around. It's not true. We put a lot of money in our programs and what left is not that much. What happened, I told you we have a decentralized structure. So each member, like Save the Children Switzerland, Save the Children UK and all, we are independent organization with our own budgets. And actually 4 members of Save the Children kickstarted, they provided funding to kickstart global ventures. And there is expiration date on those funding. So at one point, sooner than later, global ventures and the idea of impact investing has to become financial sustainable itself. So it was kickstarted by the organization, the 4 members within the organization.
Thanks, Adam. And maybe 2 last questions for you while we have you on the floor. Mm-hmm. Do you plan to add impact investing staff in your field offices? And what is the strategy, the targets, the terms of your new fund?
So in terms of field offices, so that's probably a future, but what I told you already, that we got those like kind of fundraising, more business development people next to the program team, and that should help, and probably they would need some training. But yes, ideally, that would be the perfect situation in the future once we get more traction and we're getting bigger in terms of capital. That yeah, ideally it would be nice to have people next to it. Now it happened naturally, so we can build the sources, source those deals and ideas and pipelines full, because everyone is excited in the organization, and the country office or even other members come to us and tell us like, hey, we work with this cool company and maybe there's something that we can help them, right? So ideally, yes, we will add people. As of now, no, we don't have money for that. But we don't need it at this point. In terms of like a strategy, I will maybe talk about the European Impact Fund, because that will be the biggest one and the one that we're going to launch this year. So we aim at 25 million euro. It's going to be 80% private equity, so equity, 20% debt. We want to split 50% Europe and 50% rest of the world. The Europe, like in terms of like where we're going to invest money, in which companies, we, after some preliminary discussion, we know that many European investors would like to see impact happening in Europe. So that's why kind of a split, that we will also aim at the startups in Europe. In general, what we aim is the impact first, but we would like to make a 10% return. The Australia Impact Fund, which is small, so very small sample, but gives us hope that we can get to 10% return. But it's going to be impact first, and that's definitely type of investor that we are looking for. Those who are more into deep impact rather than huge return, financial return. It's going to be very early stages investment, so everything pre-seed, seed, and Series A. What else? The ticket size, probably not higher than 500, 600,000 euro per deal. 10-year term, we probably are going to register it in Luxembourg for the ease of it, although it's a bit expensive for what I know. Oh yeah, the one thing is, I think Alex said it, that it's important to do as close as a community that we want to help in terms of like, you know, fund managers. We are going to be a fund manager running these things from Geneva. But what we want to do, we want to invest in deep impact, and ideally in companies that are not only working and impacting the like global south, but also are registered and domiciled there. It's not going to be a killer criteria for us. So we are going also make investment in companies that are registered or domiciled anywhere. So the example that I told you about ThinkMD, I think they're a US company, but they definitely make an impact in Sub-Saharan Africa. But what we want to do is invest in companies like Kenya or Africa or Southeast Asia based and domiciled there, though it's not going to be a killer criteria for us. So this is more or less where we're looking at. And yes, what I said, it's a startup companies benefiting children. So it can be health, it can be education, it can be data, whatever that eventually benefits children. Thank you.
Thanks, Adam. Regarding your interest for Africa, of course, if Alpha can help in any way, Mission Multiplier is not just about cross-sector partnerships and collaboration. I think certainly in our 15-year experience, we have co-invested multiple times with other impact fund managers, and it's always to everyone's benefits, because we exchange best practices and complementary insights.
Absolutely, you will get a lot of follow-up emails from me after this call. So
fantastic, and I think there might be an interest for building bridges, actually, to organize an event in Kenya in next year.
Good point.
Great. I had a question for Johannes. Johannes, you were extremely innovative as a foundation when you created the Peace Fund. This Peace Fund has now been incorporated in a broader fund concept. What would you say were the challenges and the positive impact that you drove from that experience? And what are the next steps for the Peace Nexus Foundation in terms of aligning philanthropy with impact investments?
No, thank you for the question, Tim. I think what on the impact and the challenge, I think that we have a peace-themed listed equity fund required some education and explaining to multinational companies that we invest in. All their ethical investors or ESG investors primarily focus on their environment and climate policies and practices, and then to come into that discussion. Okay, we want to discuss your operations in fragile states, which often quite a small part, but a highly impactful part of their operations, was a new theme. And I think that required time and multiple engagement meetings to say, okay, this is important for you, this is material for you, you have a huge human rights risk or reputational risk in these markets, you can make a positive contribution. So it takes time to raise this point on the agenda of our corporate counterparts. So that was one on the engagement side. But I do think that we were able to provide them with recommendations that no other investors were putting on their agenda. So we provide new information, and they valued that information, and a lot of companies actually took action following these recommendations. So I see value in really like expertise-driven engagement towards companies. I think what challenges were is like we started relatively small. When we launched the fund, it was less than 20 million as a listed equity engagement fund. That is on the small side. So to get bigger tickets in, it needed to grow faster. But then like you need a track record to grow it faster. So that was, I think we had challenges to grow to the envisioned size. We thought, okay, within a few years we have like around 100 million of investments to also have a bit more financial weight in these discussions with companies, and that was challenging. And I think it's also, and I think probably a lot of the people in this group would recognize as well, to find your ideal investor profile. Is it faith-based investors? Is it like institutional investors? Is it more private wealth? We were looking, okay, who would like to partner with us? And we found some committed pension funds that partnered with us. And I think that was really promising, but it was difficult to find the ideal investor profile for this peace-themed engagement fund. But we're very happy that it's now merged. It has a bigger size, so it's further mainstreamed. I think the peace theme was recognized, and now, yeah, we could take a step back. The ship is now out of the harbor, and we could take a step back. And I think that encouraged us to look at our impact portfolio. Is that optimally invested, or can we do things differently? Can we be more innovative? So I think that's the next chapter for Peace Nexus, is to see, okay, what can we do with our impact portfolio, while in parallel we want to engage with other investors on this peace theme and operational activities of companies in fragile states. So we want to raise it to the agenda of institutional investors, and we want to look at our own impact allocation. What can we do more with that?
Thank you so much, Johannes. I mean, certainly peace is a very hot topic. We're seeing what's happening in Ukraine, in Sudan, in the South China Sea, all increasing the level of overall risk for the global community. And I think that trying to invest for peace and engaging with the multinationals and the local actors that can reduce conflict or even avoid it is a great added value from a Swiss organization to the global landscape of development. Maybe, oh, by the way, there's a question on whether this is being recorded. Yes, it's being recorded, and yes, the recording will be shared with all those who registered for this webinar. Alex, perhaps going back to you, I mean, your organization has impressive numbers. You were created about 20 years ago. Since then, you've mobilized $3 billion in gifts and investments. You're serving 150 clients with more than 100 core staff. I mean, essentially, you're powerful enough to have a major impact on some agendas on a global scale. For RPA this year and the next, what would be the critical mission points? What are you going to focus on? What do you want to see happen in the next couple of years?
Oh, big question. Thank you, Tim. I mean, our overall mission is to help move the sector along, no? Accelerate philanthropy for a more just world. And my personal mission is to do that at a European level, but building bridges very consistently to the global south. I mentioned that before. We need to get closer to the local communities. A big part of our strategy is to center communities and to co-create with the local people much more actively. You know? So our agenda goes along many dimensions. You say the influence that we may have in working with donors goes along issues. Now we work, for example, very much on everything related to climate change, environment, biodiversity, and so forth. We have 40 programs in that space, or hosting 40 programs in that space. Inclusion, we very much try to advance an agenda related to diversity, equity, inclusion globally. Each region there has its own context and its own flavor. I mean, the United States is very shaped by the events in the last few years and by their history, but it's a very relevant topic anywhere around the world, including Europe, with our colonial past and imbalances of power. So we're working very much to make philanthropy much more aware and much more active on that front. So thematically, the lines of work are very broad, as you know, along the entire SDG spectrum. And then in terms of the how-to, we're pushing more community-centered philanthropy. There's a lot of discussion, you probably know this, about trust-based philanthropy, of how to empower more the local communities. So we're trying to go to models which provide more unrestricted funding, more core funding, which is essential for the social purpose organizations to get their work done on the ground. And then also to think more broadly about what instruments are most effective, not kind of going back to the conversation we just had. So it's all about the what and the how and the big issues. So this probably sounds as too generic an answer to you, Tim, but the fact is that we're working on so many fronts because the needs are massive, right? And on ecosystem building and on knowledge dissemination. So it's a very broad mandate, and we hope that we can modestly move the needle a little bit. I mean, you say it's big, it's still small in the great scheme of the needs, right? And that's why it's so important that we all become multipliers of impact, right? Each in our own capacity.
Maybe to rebound on two things that you said, Alex, one of them is related to local community and the other one to systems change. I have to say that in the last couple of years, more and more impact investors are going beyond what they can do with their own capital and their own fund and trying to think of how they can collaborate with others to affect systems change. Because we need to be systemic in our thinking to be able to address in time some of these sustainable development goals that if they're not addressed or funded will lead to dire or even catastrophic outcomes. We're seeing now that because of climate change, you have a drought in Spain that is affecting food production, and that is a key contributor to the food systems in Europe, for example. We're seeing that the fires in Australia that are happening with more intensity every year are creating new phenomena of El Niño that is affecting all the fisheries of Latin America, for example, right? So we know from the pandemic, we know from climate change, we know from plastic pollution that all systems are interconnected. And that means that we need to adjust our intervention models to the scale of the challenge. And that means more partnerships and the efforts to think on a systemic basis. The other point you make, Alex, on local community, I think, typically I'm a big fan of philanthropy and impact investing in emerging markets because dollars there have a bigger impact because things tend to be cheaper than in Europe or the US. You've got 85% of the world population living in emerging markets. You've got 99% of population growth happening there. And they are a growing share of the global economy. That being said, for us in Switzerland, for example, I think it would also pay off to take a look at what's happening at home, right? How sustainable is our water resources, right? We know that there's a massive permanent evaporation on a net basis every year of waterways all around the world. And hydro is a big component of our electricity systems in Switzerland. To what extent climate change is going to affect the viability of electricity or food systems in Switzerland, and what can Swiss technology and Swiss know-how do to address that? I think it's interesting to look at what we can do on a local level and also work with local stakeholders to define our strategies. Yes, Alex, go ahead.
No, thank you again also for that comment, Tim, also on the systems change, which is essential. And I simply wanted to point out, if you go to our webpage, you'll see that we have a big initiative on systems change for the reasons that you stated, Tim. We need much more concerted effort, and that's why we put so much effort on collaboratives. But there's some resources there, key study, because systems change can sound very, very daunting, right? And how do you cut into it? So there's a lot of work. We build a community of practice to work around that. So those of you who are interested in that, I invite you to look at our Shifting Systems initiative. And in the words of, we were recently at school and speaking on this topic with a bunch of leaders, and somebody used the term that the philanthropy is behaving too much like paracetamol, paracetamol philanthropy, just mitigating a little bit the headache, but not really going down to the roots, right? So that's what we need to have more philanthropy moving away from paracetamol to the root causes. And you're familiar with probably the iceberg metaphor with all the different levels, all the way to the mindsets and the structures that are behind it. No? So the emphasis needs to be there. Less paracetamol. Thank you, Tim.
Wonderful. Well, if there's any other questions, please raise your hand or share it with the chat now. In a second, I'll invite the presenters to share their final word and then hand over to Fred for the closing remarks. Maybe one comment that we'll hear more from Deborah as well on the next event in this series that we're hoping will take place in person, and I think in Zurich. Is that correct, Debbie?
Yes, that's correct. So we're looking at doing an in-person event, because we've done a few of these virtually, and we thought it would be great to get together in the same room and not just in the virtual room. So November would be probably the month we're looking at to host an Impact for Breakfast session here in Zurich.
Thanks, Debbie. Looking forward to that. And then, of course, many of you know Swiss Foundations, the Association of Leading Foundations of Switzerland. They will have their annual conference in the fall as well. So I encourage you all to look at their website, look at the agenda, and try to attend if you can. And maybe in a future session, we can also address the path to innovation for philanthropies and foundations, because we've got 3 examples here with Save the Children and Peace Nexus and RPA of innovations, but you can hear from the experiences that it hasn't been easy. It's taken time. They've had to, convince their boards and then mobilize staff and capacity and define strategies. So adding innovation, adding instruments to the range of measures you can use to achieve your mission, the path of the intrapreneur can be very challenging. And I think it'll be interesting to organize a future event on that specifically to help all of you bring more innovation to your organizations in your quest for greater impact. With that, I'm going to hand over to Adam for a final word, and then Johannes and Alex.
Just a final word from me as a newbie in the crowd. For us, for the Save the Children, this is like really startup thing, a new thing, truly innovative, and it's uncharted waters a bit. And it's really encouraging to see how welcoming and open the sector is. So we started in Switzerland talking about impact investment very recently, and already we're making some really big steps in terms of like knowing people and networking, which is really, really helpful. And yeah, that's very encouraging. So thank you so much.
Johannes?
Yeah, no, thanks for the opportunity to connect. I think what we are looking for as a foundation is also what kind of products are out there that are aligned with our mission, which products have a direct or indirect peace building impact. So we greatly value if investable opportunities are there to reach out and to share these with us, and also would encourage to various initiatives that create further transparency on what kind of impact products are being developed or are currently on offer.
Thank you, Johannes. Alex?
Yeah, well, first, a big word of thanks for you all to convene this conversation. As I said, I think these 4 are multipliers. They're enriching to me as well. Adam and Johannes, I didn't know about the work you guys are doing, and it's wonderful to hear. And in terms of the rest of the community, I simply underscore what I said before. It's be bold. You know, there's a big need to align all assets towards impact, and very often philanthropy foundations tend to limit themselves in terms of the level of ambition and boldness and risk to take. And I think there's a big opportunity to punch above your weight. So I encourage you to do that. And, you know, if there's any way we can help, happy to do so, change knowledge, you know, whatever matters. So delighted to be helping the field. Thank you for your time and interest.
Thanks, Alex. And to answer the questions in the chat, one of the big events gathering foundations in Switzerland will take place on the 8th of November in Basel, organized by swissfoundations.ch in collaboration with Profond. So you can take a look at the chat for the link. That's it from me, from us. Final closing remarks from Fred. Thank you so much, everyone, for your participation and interest.
Thank you, Tim. Wow, thank you, everyone. This was a fantastic session. Thank you for the speakers. I didn't know your work either, and I think that was very, very insightful. It made me think maybe just 2 observations on the impact industry as a whole, and I heard many comments, you know, to basically not enough impact first is one thought that we had. Moving very close to the communities, another one, which I can only subscribe to. I think it's very good, and we showed, you know, studies at iGravity that, you know, impact first has definitely more impact than investing with impact. However, just with impact first, we're not going to manage this gap that Tim was showing at the beginning of the presentation. So I think it's really paramount to use all these initiatives that we have where there are impactors to clearly attract more capital into impact investing from investors with return or with impact, however you want to call it. And I think that's really the challenge we have here, and that's why we need to join forces to be able to have the suitable product solution that attracts any type of investors, I would like to say. And that's a big challenge, and I can even share the one we're doing at iGravity for the information. We had a small blended finance note. It is a ridiculous amount of 1 million today, and we have more blended capital than investors into a note that returns 8 to 9% return for investors with de-risking. So we definitely have challenges of our own here, but I think it certainly is an image of the challenge we have in terms of the amount of 4 trillion a year we need to attract into this industry. And maybe a final thought on what we're trying to do here, which is, you know, talk. And so I remember Alex saying there's more talk than walk. Of course, it's a little bit sad. I'm the first one to push people, but let's continue the talk. There's definitely need for education as well as talking. I heard Adam saying that within the institution, it's not always easy to, you know, to have everybody aligned. When we talk to investors with iGravity and talking to banks, they don't even make a difference between ESG and impact. So this is quite striking, but it's happening every day, still today in Switzerland. So, I mean, the education is really needed more than ever. It's coming. There are big programs where banks are using all their advisors to learn about impact and how it's done. So I think I have some hope that it comes, but I just can ask you to walk first, you know, walk to the next November meeting in Zurich, where we're going to actually gather together to talk. So it's a walk to talk at the moment, and then hopefully after that we can make some investments together. So with that, thank you everyone. That was actually a very great session today, and I give the word to Deborah.
Thank you very much, Frederick. And again, also my huge thanks to Alex, Johannes, and Adam for the extremely insightful presentation and sharing the work you do, and Tim for running smoothly through this session, and Morgan and Frederick for co-hosting. Thanks to everybody. And thanks for everybody for joining, for participating. I think that's what we want to create with IFB. Have a platform out there for where there's room for collaboration and to work together. And I think that's what we try to do. And it's nice to see how many people come together to do this and walk and talk together. Wonderful. Thank you so much, everyone. Look forward to seeing you in November, and we'll keep you updated. Just sign up to Impact for Breakfast, and you'll know when it is happening. Details, we'll share them with you as soon as they're up. Thanks everyone for joining. Take care. Have a good day, and look forward to seeing you soon.
Thank you. Bye.
Thank you. Bye.
Bye.